Hey everyone, welcome back to the channel. Today, we're breaking down the key market moves from November 20th, 2024, and taking a closer look at what could shape the markets heading into next Monday. If you're serious about trading or just want to stay ahead of the curve, stick around for the details that could impact your portfolio. Let's start with today's action. The major indices closed mixed, with the Dow Jones Industrial Average inching up 0.3%, finishing at 35,750, while the S&P 500 slipped 0.2% to 4,485. Over on the tech-heavy Nasdaq, we saw a steeper decline of 0.6%, closing at 13,720. What's driving this divergence? Two words: earnings and rates. Retail earnings dominated headlines today. Shares of Target soared 8% after the company smashed expectations and raised its full-year guidance. On the flip side, Macy's stumbled 5% as declining foot traffic weighed on sales. Tech took a hit, largely due to renewed concerns about interest rates. Fed Chair Jerome Powell's comments about persistent inflation risks sent Treasury yields climbing, with the 10-year note hitting 4.75%. That's putting pressure on high-growth names like Nvidia and Tesla. Zooming out, let's talk sectors. Energy stocks were the clear winners today, with crude oil climbing 2% to settle above $81 a barrel. Companies like Chevron and ExxonMobil gained over 3%. Financials also had a solid day, riding the wave of higher yields. But it wasn't all sunshine. Consumer discretionary stocks struggled, led lower by Amazon, which dropped 2.5% on news of weaker-than-expected holiday sales projections. It's a reminder that not all retail is created equal in this challenging environment. Now, let's pivot to what's on the horizon for Monday. First up, the economic calendar. The most significant data release will be October's Personal Consumption Expenditures Index, the Fed's preferred inflation gauge. Analysts are expecting a year-over-year increase of 3.4%, but any surprise here could send ripples through the market. Corporate earnings will also take center stage. On Monday, we'll hear from Salesforce and Zoom Video. Both are bellwethers for the tech and work-from-home sectors, so their results could set the tone for the broader market. From a technical perspective, the S&P 500 is sitting just above its 200-day moving average, which has acted as a critical support level this year. If it breaks below 4,470, we could see accelerated selling pressure. On the flip side, a push above 4,500 could reignite the bulls. For the Nasdaq, watch the 13,700 level. If tech doesn't recover, it might test 13,500, a level not seen since August. Dow traders should keep an eye on 36,000, a psychological barrier that could invite fresh buyers if crossed. So, how should you position yourself for Monday? Here's a quick breakdown. For short-term traders, focus on sectors with strong momentum, like energy and financials. Look for breakouts in names like Devon Energy or Bank of America. For long-term investors, consider nibbling on high-quality tech stocks that have pulled back. Companies like Microsoft and Alphabet are looking attractive at these levels. Risk management, with volatility likely to pick up, don't forget your stop-loss orders. Protect those gains and stick to your game plan. That's it for today's recap and forecast. If you found this breakdown helpful, smash that like button and subscribe for more market insights. Let me know in the comments which stocks you're keeping an eye on for next week. Thanks for watching, and I'll see you on Monday with a fresh market update.